Hello traders. Today we're going to look at how to trade the open. On this occasion, the market that we're going to be trading is the FTSE 100 index. And every morning I go through the same quick process in order to prepare for the start of trading, which is at 8 AM UK time. I'm going to talk to you about the morning rituals that I have that prepare me for trading, so what I look at and how I prepare my charts. And we'll also have a look at the trades that I took this morning and the thought processes that I had in approaching the trades and how the market developed through the morning session. I hope that you'll find it interesting and useful for your own trading. I usually turn on the broker software and get my charts up on the screen about 7:30, 7:45, and this gives me time to do my preparation and then grab a quick cup of tea before the market opens at 8 o'clock. And usually the opening exchanges in a market like the FTSE are quite frenetic, quite volatile, and the market can make plenty of rapid twists and turns before it settles down. So I rarely take any trades before 8 o'clock in the morning. However, my broker, the broker that I use is IG, and they do operate a 24-hour market on the FTSE. So we can see on the screen the pre-market trading. And I use this to start my analysis. So first of all, what I do is I get a quick overview of the recent price action, the pre-market trading price action. And I trade the 5-minute time frame, and this is the FTSE 5-minute chart in front of us. So today we can see the pre-market trading since 6 AM has been fairly bearish, and we're in a bearish swing at the moment. And the last bar on the right hand side of the chart is the 7:55 AM bar. If we look further back, we can actually see that in fact the price has been trading within a range, and that's the range that you can see on the screen, and it's actually been bullish from the early hours from 1 o'clock in the morning and then bearish since 6 AM. So currently the market's sitting about in the middle of the range. Price is currently in the middle of the right hand side of the chart. I don't normally read too much into the last few candlestick bars before the open because price tends to ignore this piece of action when it does actually open. And I like my charts to be fairly clean and tidy in terms of what I've got drawn on them. When I first started trading, I used to have lots of indicators all over them, but now I like to be able to concentrate just on the price action and be able to see what's going on. So I do draw some trend lines on them, some support and resistance lines, and also sometimes I'll use a moving average or two. With the market open, I know that price will often offer up some good reversal opportunities. Sometimes it just sets off in one direction and trends and never looks back. But more frequently the market sort of feigns to go in one direction and then reverses off in the opposite direction. With this in mind, I like to gain an idea of where the reversals are likely to take place. And the first place to start is to look at where the high and where the low of the day have been so far. The recent swing high and the recent swing lows. And we can see those on the chart in front of us. I'll then go back a little bit further on the chart to see where the market closed yesterday, and this is the 24-hour market, and obviously yesterday's close price isn't marked automatically on the chart in front of us. So I'll go back to 4:30 PM when the market closed yesterday on the chart and mark that price in with a support and resistance line on the chart. And I'll also mark on yesterday's high and yesterday's low prices if they're near the current price action. In addition, I like to see where the pivot points are because they tend to act as magnets and they draw the price to them, clinging onto it almost before then repelling it away. So I've added yesterday's close and the pivot point to our chart here, and you can see how price has reacted to these levels in pre-market trading. These two levels have actually acted as boundaries to price, with yesterday's low being the upper boundary and the pivot point being the lower boundary. And these are the two obvious levels to look for in terms of early trading. It'll almost certainly hit one or the other, or both, of these lines in the opening half an hour or so of trading. And so I've concluded at this stage that the market is in a trading range. And as traders who've taken our trading course will know, when price is in a trading range, it tends to bounce from side to side of this range before breaking out. And the key question at this stage that requires an answer from me in order to make some money out of the market open is, which boundary will price hit first? So at this stage, if you had to have a stab at it, which way would you say that the market would go? That's the kind of dilemma that I have at the moment. So what I'm actually thinking as this is transpiring is I'm thinking, okay, that the market can either go down or it can go up, and that we're in the middle of the range. Now, I want a good trader's equation out of this trade, which means that I want my risk to be a little bit smaller than my potential reward. Okay, and at the moment, my risk would, if I was going to bet that the market was going to go down, my risk would be the difference between the price here and the price up here, which is where I'd have to put my protective stop. And my potential reward would be maybe down here. So the reward's slightly less than the risk in that case. In the other direction, if I was expecting or trading on price going up, then I would have to put my protective stop below here, and my reward would be potentially this support line, this close, yesterday's close here. So that's the dilemma. As it stands at the moment, the risk and reward are around about comparable. And I'd be thinking also about probability. So I'd be thinking about what's the probability of the price falling from this level and what's the probability of price rising from this level. And I know that the difference between where the price is now and where it closed yesterday is called a gap. And gaps on price charts tend to close quite quickly. And so the likelihood is that at some point in time during the opening phases, the first couple of hours of the market trading, that the gap between where price is now and where it closed yesterday, that gap will actually close. I know that it's likely to happen, and it's likely to happen mainly in this case because price is currently sitting quite close to yesterday's close. If there was a huge gap between the two, then there's less likelihood that the gap will close. But because there's only quite a small gap, then the likelihood is that the gap will close in the first couple of hours. And the thing is, will the market actually go down here first before it actually goes up? Okay, so in order to allow for that, I'm going to be looking for the market. I'm going to look to trade the gap close, and before I do that, I need to make sure that I'm trading it with a good trader's equation. So my risk would need to be, my protective stop would need to be below this pivot level here. So I'm going to actually need the market to come down to about this level here at the open, and at this level here, my risk, which would be this, would be smaller than my potential reward, which would give me a good trader's equation, and I could take the trade. Hope that makes sense. So that's what I'm going to be looking for the market to do. So let's see what happens. And that's the opening bar. So that's the 8 o'clock bar. And you can see that initially the market did drop down before rebounding upwards. Actually, it was quite volatile during that period, and there was a lot of up and down during that period there. So I had time to get into a trade here. So I'm now trading long. I've got a buy position on, and I'm expecting my target to be price reaching this particular line here, yesterday's close. And so we can see and follow price action to see what happened. And you can see that actually quite quickly price did reach that particular target. It reached the target, it went through it as normal, and then it's rebounded back down. Okay, so that was a successful trade. It was quite a high probability trade. Gap closes are quite high probability, and therefore I was prepared to accept just over a 1-to-1 reward to risk ratio on that particular trade. So this was effectively a scalp trade, 1-to-1 reward to risk. And sometimes with scalp trades, I'll actually scalp 50% of the trade and swing the other 50% of the trade. So I'd take 50% of the money off the table when price reached here and leave 50% of the money on in the hope that price will go like this and I'll get more of a reward on the second portion of my trade. But in this case, because price was in a trading range with the upper boundary here and the lower boundary here, I'm not prepared to gamble on the fact that price is going to break out of this range straight away, because price very often, when it's in a trading range, will stay in the trading range for quite a long time. And there's a more probability that the price will remain in the trading range than it is that the price will break out. Okay, trading is all about managing probability, managing your trades according to probability. So let's see what happens next here. Okay, so what actually occurred was that price rebounded, came down and then rebounded upwards. Okay, when this sort of thing happens, I always like to look to see what was the level that price reached when it was at its lowest. When did it actually turn? I draw a support line in at the turning point here. Okay, and then it's a question of really just looking back and saying, okay, was this just a random reversal here, mini reversal, or did it actually mean something? Well, in order to judge whether it actually meant something or not, we need to look back and see here that this level has been significant in price on a couple of occasions, and most importantly significant in that the price previously came down to this level and then rebounded. And so we know that this level has acted as support in the past. So that's quite relevant. And with the following two bars being bull bars and again testing the high of the range, I'd be looking to see at this point in time whether or not the market's going to break out. So let's have a look and see what actually happened. And again, I'll be looking at this point in time saying, okay, I'm expecting price to rise. I'm expecting it to possibly break out of the range at this point in time. Where would my risk be? Okay, so my risk is going to be down here, potentially somewhere. Could be here. In this case, I'm going to be looking to be prepared to put my risk here. There's a good reason for that, because there's a support line here which has acted as support in the past and been tested in the past. So I know that if price drops down below this level here, then I'll be wrong in taking my decision to make the trade, and therefore I'm prepared to be stopped out at that particular level here. Okay, I could put my stop down here. However, I don't really see much advantage in doing that, given that there's a support level at this level here which is closer and will lower my risk. So what I'm looking for here is I'm looking for price to actually rise above these two highs here. Okay, so we've got two highs. So when price rises above one particular candlestick, the high of one particular candlestick bar, then that's significant because it means that the market's making higher highs. When it rises above two candlestick highs, then there's more significance, especially when the two highs are at the same level. So I'll be looking for price to do that, and then my target for this particular trade will be somewhere around about this particular level here. This is the R1, pivot level R1, and on this particular occasion I'll be looking to swing my trade for 50%. So I'll scalp 50% and take a 1-to-1 reward to risk on the first 50% of the trade, and I'll be swinging the rest. And this is what happened. So I took 50% of the money off the table here, and I'll be looking to swing the rest. When you're swinging part of your trade, you are accepting that price is going to go against you somewhat. So you're prepared to accept pullbacks. And here's a mini pullback. So price rushed through this support level and then came back. So rather like what happened here when price attempted to break out of the range and then pulled back, it met a support level and then zoomed off. And I'm going to be looking for this to do the same sort of thing. I'll also be looking at this point in time for any reversal candlesticks that I see. And I can also draw a trend line, mini trend line, across the tops of these particular pullback bars here. So let's have a look and see what happened. The market continued to pull back. Now this is quite a strong breakout. Okay, so we can expect that at some point in time in any trend or any breakout, there's going to be some level of pullback. However, because of the strength of this particular breakout, you can expect the pullback to be temporary. So as I said before, we're looking for reversal bars in the pullback. Okay, and we've got a couple. So there's one here. This is a bullish pin bar. And had price then risen above the top of that particular bar, that would have triggered me into a trade. However, it didn't, and the market continued to pull back. That's a possible bullish reversal bar, although it's got a bearish body. And that is a bullish pin bar, bullish reversal bar with a bullish body. So what we're looking for here is we're looking for price to just rise up above the top of this particular bar, and then that would then trigger me into another trade. So at this point in time, I've got 50% of my original trade off the table here, and I'm swinging the remainder, so I'll be looking to put the other 50% of the trade back on at this particular time, and be looking at a target somewhere up here for the remainder of this particular trade. The original part of the trade would be still running, so I'd be looking at an original risk of this, and we'd be looking at an overall reward up here somewhere. So we'd be looking at probably 3 or 4 to 1 reward to risk, which is a great trader's equation. Another thing that I find useful, as well as reversal bars, for determining when pullbacks in trends are likely to end is the 20 exponential moving average. So I've put that on the chart here. So you can see that at this particular time here, this was a potential reversal bar, and it would have been triggered into an entry when this bar rose above the top of this bar. However, at this point in time, the pullback is nowhere near the exponential moving average. So I'd have ignored that. And when it came down here, and at this point in time here, the market is testing the exponential moving average. It's right next to it, and it bounces off. And when it bounces off like that, and it leaves and closes, leaving a bullish reversal candlestick, then you've got a possible entry. So this is your signal bar, and what you're looking for next is you're looking for an entry bar to confirm, which you got. Actually, the market then zoomed off, and we got our target up here. So actually, as this turned out, this was a perfect example of the initial stages of a 5-phase trend, which we talk about in our trading course. And we had a very strong initial leg, and whenever you get a very strong initial leg to a trend, you can expect a second leg. We had a pullback, which you could have drawn a trend line across here just for confirmation. And then when the market breaks that trend line, when it bounces off the EMA, when you get the bullish reversal bar, you can trade in the bullish direction for the second leg of the trend, which is what we did. So 3 superb trading opportunities in the first couple of hours of trading on the FTSE. First one was a trading range trade, second one was a breakout trade, and the third one was a pullback reversal trade. So I hope you found all of that useful. All of these principles we teach in our day trading and swing trading training course on the website at excellenceassured.com. As I say, hope you found this useful. My name's Anthony Beardsell, and I'll talk to you the next time.